What is money? Why do we use it? Imagine a world without money. You have grain to spare, but you need tools. What do? This is where money comes in. Money is a medium of exchange. It solves the problem of barter. It makes trading easier. Throughout history, humans have used different things as money. The story of money is a story of innovation. It is a story about solving problems. It is a story that continues to unfold today. Let's journey through the fascinating history of money, from bartering to Bitcoin. Before money, there was barter. Barter is the direct exchange of goods and services. You have something I need, and I have something you need. We trade and both benefit. Early civilizations relied heavily on bartering. Farmers traded crops for tools, hunters traded meat for hides. Barter worked well for simple transactions. However, barter has limitations. What if the farmer doesn't need tools but needs medicine? What if the hunter doesn't have enough meat to trade for a valuable item? Barter requires a double coincidence of wants. Both parties must want what the other has. This is not always easy. People needed a better system. As societies grew more complex, people needed a better way to trade. They needed something that everyone valued. They needed a common medium of exchange. This is how money was born. Different cultures used different things as early forms of money. Shells were common, especially in coastal areas. Cattle were valuable in pastoral societies. In ancient China, people used knives and spades. Salt was valuable in many parts of the world. It was used to preserve food. These early forms of money had some things in common. They were durable, portable, and divisible. They were also relatively scarce, which gave them value. The next big step in the history of money came from Lydia, a small but influential kingdom. Lydia was an ancient kingdom located in what is now the western part of modern-day Turkey. It was a land rich in resources and culture. Around 600 BC, the Lydians started using coins, marking a significant advancement in the way people conducted trade. These early coins were made of electrum, a naturally occurring alloy that combines gold and silver. Electrum is a naturally occurring mix of gold and silver found in the rivers and streams of Lydia. The coins were stamped with images to show their value, often depicting symbols of authority or deities. The invention of coins was revolutionary. Coins were standardized, meaning they had a consistent weight and purity. Each coin had a specific weight and purity, which was a significant improvement over the previous methods of trade. This standardization made trading much easier and more efficient, as people no longer had to worry about the authenticity of the metal they were trading. Merchants no longer had to weigh and test every piece of metal they received, saving time and reducing the risk of fraud. They could trust the value of the coins, knowing that each one was backed by the authority of the kingdom. This innovation helped to boost trade and commerce as it provided a reliable and efficient means of exchange. The use of coins spread quickly, influencing other cultures and laying the foundation for modern monetary systems. Section 5. Golden Age. The rise of precious metals. Coins made of gold and silver became widespread. These metals were durable, divisible, and relatively scarce. They also had intrinsic value. People valued them for their beauty and usefulness. The Roman Empire used gold and silver coins extensively. The Roman denarius, a silver coin, was the standard currency for centuries. In China, gold and silver ingots were used as money. The use of precious metals as money had a profound impact on history. It facilitated trade over long distances. It also led to the development of banking systems. Section 6. Paper trail, the birth of banknotes. Carrying large amounts of gold and silver was risky. It was also impractical for large transactions. This led to the development of paper money. The first banknotes appeared in China during the Tang dynasty in the 7th century. These early banknotes were essentially receipts of deposit. Merchants deposited their coins with a trusted person. They received a paper note that represented their deposit. They could then use this note to make payments. The use of paper money spread slowly at first. It took centuries for it to become widely accepted. People were initially hesitant to trust paper money. Section 7. Banking on trust, from goldsmiths to institutions. The development of paper money went hand in hand with the rise of banking. Early bankers were often goldsmiths. They had secure vaults for storing gold and silver. People began to deposit their coins with goldsmiths for safekeeping. The goldsmiths issued receipts, which could be used as money. Goldsmiths soon realized that they could lend out some of the deposited coins. This is how banking began. Banks played a crucial role in facilitating trade and economic growth. Section 8. Digital dollars, money in the electronic age. The 20th century saw a rapid evolution of money. We moved from a world dominated by cash to one where money is mostly digital. Credit cards emerged in the mid-20th century. They allowed people to make purchases without carrying cash. Electronic transfers and online banking became commonplace. Today, most financial transactions happen electronically. We use debit cards, credit cards, and online payments for everyday purchases. Physical cash is becoming less common. Section 9. Crypto craze, Bitcoin, and the blockchain revolution. The latest chapter in the history of money is the rise of cryptocurrencies. Bitcoin, created in 2009, is the most famous example. Cryptocurrencies are digital currencies that use cryptography for security. They are decentralized, meaning they are not controlled by governments or financial institutions. Bitcoin transactions are recorded on a blockchain. A blockchain is a distributed ledger that is publicly accessible. This makes transactions transparent and secure. Cryptocurrencies have the potential to revolutionize finance. They offer faster, cheaper, and more secure transactions. They also provide financial inclusion to people without access to traditional banking. Section 10. The future of finance, a world without cash. The future of money is full of possibilities. As technology continues to evolve, so too does the way we handle our finances. From the early days of bartering to the introduction of coins and paper money, the concept of currency has always been dynamic. Will we live in a cashless society? The convenience of digital payments is undeniable. With just a tap on our smartphones, we can complete transactions in seconds. This shift towards digital payments is already evident in many parts of the world. Will cryptocurrencies replace traditional currencies? Cryptocurrencies like Bitcoin and Ethereum have gained significant traction over the past decade. They offer a decentralized alternative to traditional banking systems, promising greater security and lower transaction fees. Some experts believe that cash will eventually disappear. They point to the declining use of physical money in everyday transactions and the rise of digital wallets and online banking as indicators of this trend. Others argue that cash will always have a role to play, especially in emergencies. In situations where digital systems fail, having physical money can be a lifesaver. It's a tangible asset that doesn't rely on technology. The rise of central bank digital currencies, or CBDCs, is another interesting trend. These are digital versions of a country's official currency, issued and regulated by the central bank. CBDCs are digital currencies issued by central banks. They aim to combine the benefits of digital transactions with the stability and trust associated with traditional fiat currencies. They are different from cryptocurrencies, which are decentralized. While cryptocurrencies operate on a peer-to-peer network without a central authority, CBDCs are controlled by the central bank, ensuring regulatory oversight. The future of money is likely to be a mix of different forms of payment. We may see a world where digital currencies, traditional money, and new innovative payment methods coexist, offering consumers a variety of choices. We will likely use digital currencies, mobile payments, and perhaps even new forms of money that we haven't even imagined yet. The landscape of finance is ever-changing and the possibilities are endless. As we move forward, the way we think about and use money will continue to evolve, shaping the future of our global economy. Section 11. Conclusion: Money in a Changing World. The story of money is a story of constant evolution. From seashells to salt, from coins to cryptocurrencies, the forms of money have changed dramatically over the centuries. Humans have always found new and innovative ways to exchange value. In ancient times, bartering was common, where goods and services were directly exchanged. As societies grew, the need for a more standardized form of trade became apparent. Money is not just about coins and banknotes. It represents a system of trust and value that facilitates trade and economic growth. Each coin and note tells a story of the culture and history of the people who use it. It is about trust, value, and the systems we create to facilitate trade. The financial systems we have built are complex and ever-evolving, reflecting the changing needs and technologies of our societies. As technology continues to advance, the way we think about and use money is also changing. Digital currencies and contactless payments are becoming more prevalent, making transactions faster and more efficient. The future of money is sure to be exciting and full of surprises. With the rise of blockchain technology and cryptocurrencies, we are entering a new era of financial innovation. What will money look like in the next 100 years? Will we still use physical currency, or will everything be digital? The possibilities are endless. What new forms of currency will emerge? Will we see the rise of new digital currencies, or perhaps a return to more tangible forms of trade? Only time will tell. These are questions that we can only imagine. The future of money is a topic of great speculation and interest, with many experts offering different predictions. One thing is certain: the journey of money is far from over. As we continue to innovate and adapt, the forms and functions of money will continue to evolve, shaping the future of our global economy.